Recently, the US government posted some of its weakest job numbers since the pandemic. This is a report called the Non-Farm Payrolls, and it shows us how much the labor market is growing each month. And we've just witnessed the US job market go from one of the hottest in history back in 2021 and 2022 to now the economy pretty much not adding jobs anymore. The reason this is important is because it brings us a lot closer to the tipping point where job growth could go negative, which effectively would mean that the economy is losing potential jobs, which is what happens heading into economic contractions. The last 3 times we saw a sustained contraction in the labor market were in 2020, 2008, and 2001 recession. In fact, 62% of Americans now expect the unemployment rate to rise over the next 12 months. This is one of the highest readings we've seen since the 2008 financial crisis. Historically, such elevated levels have only been seen during or just before recessions. So what we're seeing today reflects a clear economic cooldown, one that could easily trigger a growth scare across risk assets. But even with signs of a slowdown in the labor market, we don't yet believe the economy is tipping into a recession just yet. A big reason for that view comes from this chart of the home builders sector. Home builders tend to lead the economic cycle because housing sits at the core of overall economic activity. Demand for new homes is highly sensitive to shifts in key macro forces like interest rates and credit availability. When conditions tighten and growth slows, housing is typically the first sector to show signs of stress. For example, heading into and during the 2008 and 2020 recessions, home builders were breaking down. If we zoom in, we can see that heading into the tariff announcement in April 2025, home builders were moving down. But since bottoming in April of 2025, the sector has rallied by more than 35%. This strength that we're seeing in this group today is keeping us constructive on the economy and Bitcoin in the midterm. But in the short term, Bitcoin's breakdown has made us cut our exposure to crypto, as there is the risk of a growth scare potentially taking price lower in the short term. However, we think that growth will eventually hold up, either straight away or later this year, and ultimately lead Bitcoin higher. This means we're still very much optimistic on Bitcoin heading into the end of the year, and we'll be continuing to look for attractive risk-reward opportunities to go long. We've been taking our clients step by step through this crypto bull run, sharing our trade setups and strategy through 3 weekly premium videos. In just the past year, our crypto trades have delivered some incredible returns, including a 30% profit on Bitcoin, 36% on Solana, and even an 83% gain on Ethereum. If you want to follow all our moves in real time, make sure to join us using the link below.